Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily and weekly charts and instead concentrate on the longer term view using my monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, let me now introduce today's longer term chart.
Today I'll be looking long term at LME 3-month copper. This time last year I thought the market was in the process of forming a lopsided double top pattern, with a neckline for the pattern based on a closing basis roughly at the mauve 3-year moving average, which is currently at 94.23. We hadn't broken this neckline, and in the end we never did in 2025. True, we did breach it with a very aggressive move down in April 25, but we did not close below on a monthly basis. And instead, this strong dip lower ended up lighting the touch paper to the subsequent move higher that we've seen up to and including today. Back at the end of 2024, I had one significant pattern operation, a 2022 to 2023 bullish shift pitchfork. I said back then, and I quote, "This is not a perfect bullish pitchfork, as the upper tine was pierced in early 2024, but there was no close over it, and it's currently at 11,739. And though dented, I think it is still secure as a pattern," and that's the end of the quote. Well, as we have already seen in April 2025, the lower tine was breached, in addition to the earlier breach in 2024. Thus, it was weakened as a bullish pitchfork, such that it was relatively easy for the market to make a strong bullish rally in December 2025 and break this pitchfork. As to why it did so, well, we need to look at the whole action from 2020 to date as a bullish halfway hesitation. A ragged one, I grant you, but still a bullish halfway hesitation. On the extreme, this would give a potential target up in the 14,400 area, so not too far from here, but still up where the market would most likely be suffering from vertigo. Those are the immediate opportunities, but I wanted to make sense of this market and the patterns it was creating and utilizing. Thus, I had to go back and look at the whole 2008 to 2025 move and see how it created a huge, bright red bullish shift pitchfork. It is not an ideal pattern, as it was breached on the downside back between March to May 2020. However, aside from this aberration, the action fits, even if it is somewhat sparse. Thus, I would pay special care on the bright red upper tine, which is currently at 13,325, on a closing basis especially. And by this I mean carefully monitoring not only breaches above, such as you have seen, but consecutive monthly closes over it. I can't help stressing that. It is, after all, a very long-term pattern.
Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.